Hello, everyone. My name is Zulfiqar, and welcome to Income Investors. With me today is John Whitefoot. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. There aren't a lot of businesses or people that like rising interest rates. After all, higher interest rates make it more difficult for businesses and individuals to borrow. One industry that is having a great time, though, these days is asset management, in particular, business development companies, or BDCs for short. Like today's income pick, OFS Capital Corporation, traded on NASDAQ under symbol OFS. But first, let's talk about what BDCs are. John?
Yeah, thanks, Mo. Yeah, most people aren't familiar with BDCs, but we're going to get into it a little bit. BDCs operate in much the same way as traditional financial institutions. They borrow money at low interest rates, and then management lends out the proceeds to customers at higher yields. Their profit, which is called the spread, comes from the difference between what the BDC receives in interest and pays to creditors. Like traditional banks, BDCs build sprawling nationwide operations. They provide loans to customers in various industries. However, the similarities pretty much end there. Unlike regular banks, BDCs don't serve the general public. They have no branches, they have no ATMs. Moreover, they don't provide mortgages, checking accounts, or credit cards.
And that explains why most investors aren't familiar with vast majority of BDCs out there, right?
Yeah, exactly. Instead, the BDC industry has carved out a lucrative niche in the financial marketplace of small and medium-sized businesses. These customers need more funds than those traditionally provided from traditional banks and traditional bank loans. Wall Street also shuns this group of BDCs because they aren't large enough to go public for the most part. So BDCs fit right into that sweet spot of the US economy, which is basically those businesses that fall into the huge gap between commercial and investment banks. That said, a small and mid-size might be a bit of a misnomer. We're not talking about a local diner or beauty salon here. BDCs typically lend to companies that generate between 20 million and 100 million annually in sales. There's a lot of well-known companies out there that got a financial boost in the early days from BDCs, and that includes companies like Facebook, Etsy, YouTube, Smashburger, Impossible Foods, Lucid Group, and Payless. Firms use these loans to fund acquisitions and growth projects or simply pay the owners the dividend.
John, I know not all loans are created equal. So investors really need to know how likely they're going to get paid in events customer default.
Yeah, not all BDCs are created equal. For example, a BDC with a lot of senior debt stands to get paid first if a company defaults or goes into bankruptcy. Mezzanine lenders get paid second. Meanwhile, preferred and equity investors usually receive only a fraction of their original investment back, if anything at all, in the event of a bankruptcy. At the same time, BDCs don't just benefit their clients. They come with another huge advantage for income investors, and that's tax breaks. Standard financial outfits have to pay the government between 25 cents and 35 cents in taxes on each dollar they make in profit. But to encourage lending to entrepreneurs, BDCs pay little or no corporate tax on their earnings. There is a caveat, of course, and it's a good one. In exchange for this benefit, BDCs must distribute at least 90% of their ordinary taxable income to shareholders. As a result, these companies pay some of the biggest dividend yields around. So it's not uncommon to see companies with payouts as high as 15%, 5 times higher than what you might earn on a traditional bank stock.
Okay, now let's bring the discussion back to OFS Capital Corporation. Let's talk about it. Tell me what they do.
Yeah, thanks. OFS Capital Corporation, it is a BDC, of course, and it specializes in direct fund investments as well as add-on acquisitions. The company provides shareholders with both current income and capital appreciation, primarily through debt investment and, to a lesser extent, equity investments. OFS Capital invests primarily in privately held middle market companies in the US, targeting investments in companies with annual EBITDA of between 5 million and 50 million. It does not invest in operational turnarounds or startup companies. What it does offer, though, is senior secured loans as well as subordinate loans and, to a lesser extent, warrants and other minority equity securities. Most recently, as of March 31st, based on fair value, 94% of its loan portfolio consisted of floating rate loans, and approximately 99%, or virtually all, of its loan portfolio consists of senior secured loans, which are the most preferred type of lending vehicle you want. And it has 4.1 billion of assets under management. Manufacturing accounts for the biggest part of its portfolio at more than 27%. And that's followed by industries like healthcare and social assistance, wholesale trade, professional, scientific, and technical services. I also wanted to mention that the company's management team believes in what it's doing with 22.5% insider ownership. That's way more than the BDC sector median of just 2%.
And now let's talk numbers a little bit. How did they do in the last quarter?
Oh, they did really well. For the first quarter ended March 31st, OFS Capital reported that net investment income increased 68% year over year to 37 cents per share. It was also up from 35 cents per share in the fourth quarter of 2022. Meanwhile, I'm just going to give you a couple more numbers. I don't want to get too bogged down with this, but total investment income increased to 14.3 million from 14 million in the prior quarter. The company reported net income of 28 cents per share, which is up 55% over 18 cents per share in the fourth quarter of 2022.
What's happening with dividends here? If income is going up, and you'd mentioned that, they have to give out substantial portion of their income to investors, what's happening with dividends here?
Well, as an alternative bank, you'd hope they'd be good at making money, and they are. And of course, then they have to return that to investors. So in the first quarter, the company declared a quarterly distribution of 33 cents per share. And they maintained that payout in the second quarter for an annual payout of $1.32 per share for an inflation thumping yield of 13.17%. For context, the US inflation rate is 3% right now. OFX actually has a history of raising its dividend. That raised its annual payout for the last 3 years and has increased its quarterly distribution 9 times out of the last 12 quarters. But you still have to be careful. This isn't like a perpetual rocket ride to the moon. OFS share dividends took a hit during the pandemic, but it's not a total surprise to see a banking stock reduce its dividend during the toughest economic climate in 100 years. And its quarterly payout is almost back to its pre-pandemic levels too. In March 2020, just before the pandemic, it paid out 34 cents per share. And as previously noted, its current quarterly distribution is 33 cents per share.
And OFS stock is on the rise.
Yeah, well, OFS's quarterly dividend has almost recovered from the pandemic. OFS stock has more than erased all of the losses associated with the COVID-19 pandemic. It was actually trading at record levels just before COVID. Not surprisingly, starting of the global economy, recession, and uncertainty took the wind out of the company's sails, with OFS stock cratering almost 70% in the opening days of the pandemic. All things considered, though, it didn't take that long for OFS Capital stock to recover. By June 2021, the company was trading at record levels again. And on April 1st, 2022, it hit a new record high of $11.66 per share. That represents a 413% gain over March 2020 pandemic lows of $2.27 per share. Right now, OFS stock is also up 20% over its record pre-pandemic levels. Of late, it's traded in a fairly tight range in 2023, but shares are still up 3.1% over the last 6 months, and 1.3% year to date, and 8.3% year over year. Going forward, though, things look great. Rising interest rates and a growing portfolio has positioned OFS Capital Corporation for additional gains, I think, over the coming quarters.
All right, John, thank you so much for great insights. OFS Capital Corporation is a great way for investors to dip their toes in the world of BDCs, or what we call them alternative banks. The company's diversified portfolio consists of high-quality, recession-resistant businesses with loan portfolio made up almost entirely of senior secured loans. This helps us provide shareholders with significant capital gains and frothy, ultra-high dividend. At a time when Americans are worried about growing personal debt and recession, it's tough to beat a BDC like OFS Capital Corporation. Thank you so much for watching this video. We'll be back with another income idea soon, so stay tuned. If you want to read about John's ideas, you could head directly to www.incomeinvestors.com. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.